Brad Williams, Frugal Finance. What are mutual fund share classes? Investing in mutual funds sometimes means choosing among different mutual fund classes. One of the main differences among these classes is how much you'll pay in expenses and how much your investment professionals will be paid for selling you the fund or deciding on a share class within a fund. You should understand the differences between them. A single mutual fund with one investment portfolio and one investment advisor may offer more than one class of its shares to its investors. Each class represents a similar interest in the mutual fund's portfolio. The mutual fund will charge different fees and expenses depending on its class. Some classes provide rights or benefits that others don't. You can find out whether a mutual fund has different classes by looking at the prospectus. When deciding which share class is best for you, carefully consider how long you plan to hold the fund, the size of your investment, and whether you qualify for any sales charge discounts or other fee waivers. Your investment professional or your brokerage firm might receive higher or lower commissions or payments from the sale of one share class relative to another. You can use FINRA's Fund Analyzer to see the impact of these fees over time on your account value and to assess what share class might be best for you given your investment goal, investment amount, and expected holding period. The most common share classes that you might encounter outside of 401k or other retirement plans include Class A shares. Class A shares typically impose a front-end sales charge, which means a portion of your money isn't invested and is instead paid in part to the brokerage firm selling you the fund. Let's say you spend $1,000 to purchase Class A shares, and the fund imposes a front-end sales charge of 5%. You pay $50, 5% of $1,000 upfront, and receive shares with a market value of $950. Class A shares may impose an asset-based sales charge, often 0.25% per year, but it's generally lower than this charge imposed by the other classes, often 1% per year for Class B and Class C shares. Depending on the size of your purchase, the mutual fund might offer you discounts called breakpoints on the front-end sales charge. For example, the fund may charge a smaller percentage front-end sales charge, say 4.5% instead of 5%. You invest at least $50,000 in the fund. Another way to invest in Class A shares without paying a front-end sales charge is by exchanging your investment in one fund for investment in another fund in the same fund family. For example, let's say you sell $25,000 of your Class A share of the ABC Growth Fund and invest the proceeds in Class A shares of the ABC International Fund. Since you already paid a sales charge when you invested in the growth fund, you won't be charged a new sales charge for your $25,000 investment in the international fund. Always ask your investment professional or firm whether any breakpoint discounts or sales charge waivers are available to you. Class A shares also charge management fees and 12b-1 fees. Management fees are the same for all share classes of any fund. However, 12b-1 fees for Class A shares are generally lower than 12b-1 fees for Class B and C shares. Because of lower 12b-1 fees, total operating expenses on Class A shares over time are generally lower too. Also note that if you buy a mutual fund directly from the fund investment company, you can obtain the lower fees of Class A shares, but without the load charges or commission. Class B shares? Class B shares typically don't charge a front-end sales charge when you buy shares, but they normally impose what's called a contingent deferred sales charge if you sell your shares within a certain period, often 6 years. Sometimes called a back-end load, the contingent deferred sales charge normally declines the longer you hold your shares and eventually disappears. Within 2 years after the deferred sales charge is eliminated, Class B shares often convert into a lower cost Class A shares. When they convert, they begin to charge the same fees as Class A shares. Because Class B shares don't impose a sales charge at the time of purchase, all of your dollars are immediately invested, unlike Class A shares. But your annual expenses, as measured by the expense ratio, might be higher. You might also pay a sales commission when you sell your Class B shares. Shares generally impose a higher 12B fee than what you'd incur if you purchase Class A shares. If you intend to purchase a large amount of Class B shares over $50,000 or $100,000, for example, you might want to consider and discuss with your investment professional if you have one, whether Class A shares would be preferable. The expense ratio charged on Class A shares is generally lower than for Class B or C shares. Mutual funds also may offer large purchase breakpoint discounts from the front-end sales charge for Class A shares. Most mutual funds no longer offer Class B shares, so that might not be an option for you. Class C shares? Class C shares don't impose a front-end sales charge on the purchase, so the full dollar amount that you paid is invested. Often Class C shares impose a small charge, often 1%, if you sell your shares within a short time, usually 1 year. They typically impose higher asset-based sales charges than Class A shares. Unlike B shares, they typically don't convert to Class A shares and instead continue to charge higher annual expenses, including the 12(1)B fees for as long as the shares are held. Like Class B shares, Class Cs typically impose higher annual operating expenses than Class A shares do, primarily through higher 12(b)(1) fees. Class C shares may be less expensive than Class A or B shares if you have a short-term investment horizon because you'll pay little or no sales charge. However, your annual expenses could be higher than Class A shares and even Class B shares if you hold your shares for a long time. Transaction clean shares? Transaction shares is a term that applies to a class of fund shares without any front-end load, deferred sales charge, 12(b)(1) fees, or other asset-based fees for sales or distributions. Even though transaction shares don't impose any sales charge, in some cases a brokerage firm may separately require you to pay a sales commission when you invest in these shares. If your trades generate a commission, work with your investment professional to estimate your trading frequency, also called annual turnover, for the fund. This frequency may be related to how often you rebalance, reallocate, or redeploy assets in your portfolio. Also, if you invest in transaction shares through an investment advisory account, typically you'll pay the investment advisor a fee equal to a percentage of your assets in the account for providing ongoing advice to you. With transaction shares, some brokerage firms may not offer sales charge breakpoint discounts or waivers that would be available if you invested in Class A shares, such as through rights of accumulation, letters of interest, and exchanging shares of one fund for shares of another fund in the same family. There's no one size fits all when it comes to these shares, so you should talk to your investment professional about and what rights and benefits you're eligible for. Now you can see why ETFs, exchange traded funds, are popular, because these mutual funds are getting a nickel dime you to death. Comment if you have any questions about the mutual fund industry, these fees, or anything else related to investing. Brad Williams, Frugal Finance. Thanks for watching. Hope that helps. See you soon.